I think Bitcoin's a great asset to buy and hold over long term. However, there's no question that we have to look at the likelihood of a bear market. I've been having people also complain about how long it takes me to get into videos. I'm going to do an intro. I'm going to tell you what I'm going to talk about in this video. I'm going to roll a disclaimer. I'm also going to talk about a couple platforms that I use. And if you don't want to listen to all that, you can skip through like 3 or 4 minutes. Now, in this video, I want to do something that maybe isn't super talked about, but let's talk about some of the benefits of a bear market. Like, you don't have to be scared, right? We're down 30%, 31% from all-time highs. Think about the positives of this, if this really is a bear market. Now, there is some world where this is just a similar drawdown to what we've seen the last 2 or 3 times. People are going to point that out in the comment section. We've seen 30% drops throughout the bull market. However, this one is the one that coincides with when we typically see bear market start. We also are pretty close to all-time highs on the NASDAQ and the S&P 500, and yet Bitcoin is falling down a lot. Some of the other dips recently have been coinciding with dips in the broader market, like tariff drama, right? So this is kind of a divergence. And it seems like day after day we're seeing red in crypto. So again, let's talk about some of the benefits of a bear market, what you should be looking for, what you should be avoiding. I'll also be talking about how far we could fall down on Bitcoin. And I realize it's sometimes a shot in the dark because we don't actually know the future, but there is a number and a line that a lot of people have been watching the last 3 cycles that has kind of shown where the bottom could be. We'll also be talking about the timing of the bear market, like how long it might take to get there. Of course, I can't see the future, right? We'll also be talking about some stocks. If you're sick of crypto and maybe you're going to dollar cost average, but you also want to diversify, I will be looking at some stocks that I think are cheap. And the reason I bring this up, I've been buying these, right? These are companies that I really like that I think are relatively cheap right now. And I talk about them sometimes on the channel, but I generally talk about Bitcoin. But I think it's really important to have a base of equities or real estate or something as well as crypto. So that way you can handle volatility in crypto better. So start now, right? So that you can approach the next market cycle from a position of strength. This is a video that probably won't get many views, but it's probably really important for you to watch. Now, if you do want to trade crypto, there's a link underneath the video right now on BYDeFi. We have a deposit bonus where you can get up to $2,000 for depositing on the platform. We've been seeing some new members, and we're going to run more of these campaigns where you can trade and get up to $10,000 worth of Bitcoin or USDT, just depending on how much you trade. I'm still going to be trading throughout the bear market, to be clear, and I'll kind of give you my game plan a little bit later in the video. But this is also one of the benefits of a bear market. You get generational buying opportunities in crypto, leverage trades, and stocks potentially. So we'll talk about that. We'll also talk about maybe why the market's down today, why we kind of crashed out of nowhere. So let's roll the disclaimer and then we'll get into it. Just a reminder, this is not financial advice. This is not legal advice. Do your own research. I'm never going to reach out to you either in the comment section or through any other means to try to get you to invest in something that I'm investing in or to send me crypto. Some links underneath the video are affiliate links. I may earn a commission, but this is at no extra cost to you. Of course, do your own due diligence. All right, the general markets are down. The NASDAQ's down like 0.7% after it was up 2%. And this is even after a little bit of a rally. Now, this has caused one of the reasons that Bitcoin is down today is because of this. Like the NASDAQ's falling 3%. Well, Bitcoin was just at 92,000 and then decided to fall down about 5% over an hour. I'm having lunch with my mom and all of a sudden, Bitcoin's crashing. Bitcoin's falling off a ledge, hitting new lows. Now, we'll talk about where Bitcoin could go to, like typically where it bottoms out in a bear market. This has been the case for the last 2 or 3 cycles. So we'll look at that, like if you really want to time it where you should be watching. I'll tell you what I'm going to do though. I've mentioned it in previous videos, but I'll go through that again. The general market seems to be falling. It could be digesting the unemployment news this morning or unemployment rate, but what I think it really is NVIDIA earnings. I don't really want to get into it too much, but some people are concerned that maybe their inventory is piling up. So after their 10Q came out, we started to see the market dip. Now, I still think, I'm still bullish on the stock market. I'm bullish on Bitcoin too for long term, but I'm bullish on the stock market. I think there are actually some good opportunities We'll hit on that later in the video too. Sorry, it's a bit of a longer video because I'm going to be talking about a lot of stuff here. But there are a couple stocks, I think, if you wanted to start looking at stocks, which I invest in stocks. I've been buying stocks for a long time. And I've been buying heavily this year, especially during the tariff drama. But over the last couple months, I've been buying indices heavy and then buying some other stocks too. But I'll go through a couple that I think are actually pretty cheap right now. If you're trying to build this out after, the recent dip in Bitcoin, you're thinking, oh, maybe I'm underexposed to equities. We'll talk about it, but let's look at Bitcoin. So Bitcoin is down at $86,000. A lot of liquidations happening. Over the last 24 hours, we've seen 616 million of longs liquidated, 211 million of shorts liquidated. If we go down to the heat map, the liquidation map, there are some longs that would get liquidated if we fall down further, but look at this. Like, there's so many more shorts that would get liquidated, specifically if we go past the 50-week moving average, which is right around 98,000. Like, it kind of spikes up there. We would see 10 billion of liquidations if we went up to 101,000. If we go out to the 30-day, you can just see like everything is stacked one way. But the fact is the market's very bearish right now, and this would be a $14,000 move to the upside. There's still a world where we go into a bull market, right? I said earlier that this kind of coincides with the previous bear markets, which is why a lot of people are bearish right now. Like, if I can find what I'm trying to find here, the blue dots are when we've always peaked. This is the last peak that we've seen, very early October. Now we're halfway through this, and unless we peak again, this would signal the end of the bull market, right? Just like the last 3 cycles. Typically, we see the bottom of the bear market about a year later. I was watching Benjamin Cohen, and he's been right about just about everything this bull market, and he expects either a bottom in October next year. Again, sorry, I'm having the hardest time finding stuff. In October of next year, or maybe May, if we have a shortened bear market. So maybe you don't have to wait that long. Where we would go, he points out that most likely we would go down to the 200-week moving average, which is right now around $53,000. If it happens in May and we're moving at this current trajectory, it might be around 60,000. If it happened in October, it might be around 65,000 or so, right? So 60 to 65,000 is about a 50% drop. Last cycle, we did go below it. So we actually had it at like 22,000 and we went down to 16. So it dropped 25% below that moving average, but we also had a much more explosive bull market. All right, we had a nice 3.5x from previous all-time highs. We also had a lot of collapses happening, FTX, etc. We had a similar drop in 2020 and in 2019 where we hit this 200-week moving average. So we could see further drops, right? Now, let's talk about some of the benefits of a bear market. Let's say we are in a bear market, right? Again, we could jump back up, but this has more signs of a bear market, I think, over the last few weeks than these previous dips, right? So what are some of the benefits, just to get past that, and then we'll get into everything else. First of all, the obvious thing, you get lower prices on Bitcoin, right? You could have bought for almost a year under $20,000 or right around $20,000. Okay, that was a 6x to the peak. Even if you didn't time it perfectly, even if you wanted to sell right now, after we're down 30%, you would still get over a 4x from any purchases that you bought for a year here. So that's the obvious thing. If you're buying at 50,000 and we get another 5x, okay, Bitcoin's at 250K and you bought it at 50K. That's fantastic, right? Over a short period of time. So that's the most obvious thing. It's a little bit less risky to buy too. Like if you're buying Bitcoin at all-time highs, there's a much bigger chance that you're going to see a 50% drawdown than if it's already down 50 to 60%. Right? There's just less of a risk from that perspective of a big drawdown in the near future if we're already down significantly. Personally, I think there's actually less stress in a bear market. Like right now it feels stressful because we're falling down, but if you were in the previous bear market, it actually gets really boring, which some people don't like, but there's actually a lot less stress because there's just like, there's not a lot of time sensitivity to things. Like you have a lot of time to buy. You know, I talk about this 24 hour, 48 hour, usually that's in regard to like some piece of news that's coming out, but like you could have missed buying a $20,000 Bitcoin for 4 months and you still could have had another, you know, like 6-7 months to buy. So like just timing wise, you have a lot of time. I wouldn't get too relaxed. Like I would still buy when you want to buy, and I would make sure that you practice buying and dollar cost averaging. I've talked about that recently, but I'm dollar cost averaging right now because even if we go lower, I want to have that muscle. I want to be ready to buy instead of trying to wait for the exact bottom. The other thing is, there are also generational buying opportunities, not just for Bitcoin, right? Not just to get a 5x on Bitcoin, but if you want to buy using leverage, for example. I've been able to buy, like I bought a lot with leverage around 25 to 35,000. That's really when I started using leverage. We made really good money from that, but even some of the trades I have open right now, from $55,000 Bitcoin, they're still up 400%, even with this recent dip. So there are generational buying opportunities if you're willing to use leverage that can just set you up to take massive profits in the next bull run, right? And you can still trade in the meantime, right? Because there will be relief rallies. Even here, there were times where we went back and forth, and you can make some money from trading there. But there are also generational buying opportunities in equities. If you're willing to jump into crypto equities, like no one wanted to buy MicroStrategy at the bottom. So many people were worried about like the solvency of MicroStrategy that they were trading well under the value of their Bitcoin. Even right now, you'd be up 10x, even with the recent dip, the 70% dip or something in MicroStrategy. They were up. If you go bottom to top, you would have made a 30x on MicroStrategy. If you had used options, which I wouldn't really suggest options on MicroStrategy because MicroStrategy is already like a more volatile Bitcoin, you would have made, 10,000% or something like that if you had used options, leaps, or even like some shorter term options. But this is where you can make insane amounts of money, and I wouldn't suggest putting all your money into it, right? Don't put all your money in MicroStrategy or levered positions this bear market. But if you want to go a little bit more risk on, you can do that with a small portion of your portfolio, and it might pay as much as the majority of your portfolio that's less risky. Of course, you have to be willing to lose it, right? Like I'm not saying that MicroStrategy is going to zero, but if you're getting into more risky stuff, you could lose it. If you're looking at different Bitcoin treasury companies, right? And I don't know, some MicroStrategy equivalent is selling at like 0.4 times the value of their Bitcoin. Like maybe you look at it, right? And that's where you can get bigger payoffs, like incredible buying opportunities. There are a couple things you have to be careful of, right? Tyler Hill points out, starting to get concerned that companies and funds will start to break soon. Time shall tell how much we learned from 2022. So there are companies that are bleeding right now. So that's the one thing you have to listen for. Now, if you have the majority of your crypto on hardware devices, you're probably fine. But again, I would still kind of pay attention to that. Now, some companies that I think are cheap, and I'll tell you my crypto plan, which actually I made a full video on the crypto plan, so watch that video. I made it about a week ago. But companies, if you're looking to stocks that are uncorrelated to crypto, right? A couple that I think are cheap right now: MasterCard, Uber, Amazon, and Meta. Let's talk about them real quick. So MasterCard, Joseph Carlson has talked about it a lot. He actually goes through a much longer thesis on it yesterday. Great stock YouTuber. I like him. He's a super nice guy too. I've talked to him once or twice before. But this is a company that I bought maybe a year or two ago, and I have added to the position recently. They're a company that's growing top line at 12, 13% a year. Right? They're growing free cash flow at 20% a year. Growing dividends very quickly, buying back shares, very profitable company, switching over from just credit card processing to also like cybersecurity, right? They're a great company that's grown very quickly. They're selling at a 29 forward price to earnings ratio. Okay, not the cheapest company, but historically this is fairly cheap compared to what they've been selling at. For the majority of this year, they've been selling around a 35 to 40 PE ratio. Now they're selling at a 34. So on the lower end, definitely. Like this is almost as low as they got during the tariff drama. They went down to like a 33. Again, very deep moat company. Like you notice this is a very smooth line. Their free cash flow very smooth. So you might pay a little bit more than maybe some of the other companies that we're going to talk about today, but also they're just a very high quality company and there's not much up and down to them, right? You look at the stock price. Let's look at the stock price for the last 5 years. Like it's pretty steady and up and to the right. Look at the last 10 years. Like again, even during dips, big dips, there aren't big sell-offs, maybe 20% when other companies are, maybe 30% when other companies are selling down 30, 40, 50%. Another one that we'll look at, Uber. This is another company that's maybe around the same weighting as MasterCard in my portfolio. This is a company that's growing very quickly as well. Look at the trailing 12 months here. They're starting to re-accelerate growth. They're moving up over the last 5 years, 32% annually. Over the last 1 year, 18% on top line. Monthly active platform users also accelerating, which I wouldn't have thought, right? Uber's been around for a while. I would have thought that they would have maybe slowed down, but no, the trips are accelerating as well. We're talking about 20% increase from last year to this year. Their subscription model, Uber One members, also moving up significantly, right? They're at 36 million. I'm an Uber One member. For anyone that has a busy life, maybe has some extra income, it makes a lot of sense to Uber eat some stuff. And while Uber makes a lot of extra money from it because there are a lot of fees that come with it, it's still worth it if you're someone that gets paid pretty well. Net income spiking recently. EBITDA is doing well too. Free cash flow going up to the right. This is a company that's sitting at a 26 forward price to earnings ratio. Now they got extra bump. I think it was due to a tax benefit, but they're sitting at a 26 forward price to earnings ratio and they're growing very quickly. So again, another good company. Now there's some fear over them. Like today, they're actually down 6.5%. There's no notable news, but there are some people that are worried about Uber in Tesla, Robotaxi, Waymo world. So I do balance it out with having some Google, which has Waymo as well, then having some indices which have some Tesla, I suppose, too. Another company though that I think is probably maybe the easiest buy, Meta. Meta sitting at a 20 forward price to earnings ratio, growing revenue 21% a year, growing every other metric like earnings per share much faster. I mean, recently they had a one-time tax hit, but if you look over the last year, they're growing earnings per share 40% plus. They have dividends. They're in a good cash position. They've been buying back shares. Their expenses have been accelerating, but whenever the market doubts Meta, it's typically a good time to buy. Like if they go down to a 20 price to earnings ratio, which they went lower during the tariff drama, they went down to a 485 price, which I was buying a lot of then. But yeah, sometimes they get a little bit lower than they are right now, but we're talking about they were at price to earnings of 19. Now they're at 25. So yeah, it's a little bit more expensive, but this is such a quickly growing company. I really like this company. I think it's pretty cheap right now. Amazon, another company that I think is relatively cheap for the moat and the growth. They grow a little bit slower than these other companies, just barely double digits, but they're also a massive company. Keep in mind that the majority of their revenue comes from retail, their retail business, first-party online sales, and third-party seller services. So the majority of their business is retail, but they're still quickly growing with advertising and cloud, and that's where the majority of the profits are coming from. So their top line numbers maybe don't look quite as impressive as like the earnings per share. Now in 2022, they kind of had a negative year. So I like to look at like the last 5 years. They've been growing EPS by 37%. Now they're also spending a lot on infrastructure. They're spending a lot on chips, that kind of thing. So they are ramping up expenses just like a lot of the major hyperscalers, but sitting at a forward price to earnings of 29, I think this is going to be one of the companies that benefits most from robotics. And they don't have to be the ones that make the robotics. Like a lot of people look at Tesla and they're like, well, they're going to create the best robots. Well, if they do, Amazon's still going to benefit. if Google makes the best robots or Amazon makes the best robots. It doesn't matter because it's all going to benefit Amazon specifically because they have such a big retail business. So I really like these companies, right? These are companies that I'm buying. Google has done really well. It's actually my largest position, but I don't think Google specifically is very cheap right now. I don't know. There we go. I don't think it's extremely cheap. I don't think it's extremely expensive either, but it has gone up 70%, 60% year to date. So I think there are some companies that are selling at a bit more of a discount compared, at least historically, compared to where they've been at in the past. But I mean, Google sitting at $65 billion at a forward price to earnings of 28. It's probably more like 26 because they always beat expectations. I still don't think this is extremely expensive either. I mean, they've been buying back a lot of shares. They started to pay a dividend. Right? I think there's a reason that's up so much this year. And I was buying a lot of this throughout the beginning of the year as well. Like you could buy this under 140. How crazy is that? It was selling for 15 price to earnings ratio. There are opportunities not just in crypto, but also in stocks that you can take advantage of, and you can kind of diversify so you're not so worried about crypto. And I still believe strongly in crypto, so I'm going to be dollar cost averaging into Bitcoin throughout the bear market. I've already started that. I'm going to dollar cost average depending on how much I make. I'm going to give a percentage of that into, I'm going to put a percentage of it into Bitcoin. As we fall down further, I'll allocate more because it's a better risk reward ratio. I'll be doing that with Bitcoin ETF specifically for some security reasons, but also I think there's going to be lending, and there's also some ways that you can make, I don't want to say passive income, but you can sell upside potential with covered calls, which I haven't done in the past, but you know, it's nice to have the opportunity to do that in the future. So I'll be doing more of that throughout the bear market. If we go into a bear market, even if we go back into a bull market, I'm going to continue dollar cost averaging into Bitcoin, to be clear. And I'll continue with that. So that way I have the muscle memory down. And then I will be trading as well. I have a trade that I opened just like at 88,000 or 89,000, low leverage position. And that liquidation point is right at 72. So if we break this previous support level, I would get liquidated. I could always put a stop loss, but that's not how I'm going to work in the bear market, right? I'm going to have another limit buy order. So that way, if I get liquidated, I have another position and I'm going to ride that down. And I'm going to continue riding down the bear market until we eventually hit a bottom. And then with my low leverage position moving back up into a bull market, it will wipe out, or it will offset all the losses and also make me a profit when we go back into the bull market. So I'll be doing that. I might be doing some more short-term trading specifically at like key support levels. Let's say we do get down to 76,000, right? I might place an order so that way if we bounce off 74, we continue moving up. I make some good profits. I can take profits. Don't be surprised if we see some kind of relief rally. I would have thought we would have already seen a bit of relief, but if you look at the weekly, like it's just been 4 weeks of red. If you look at the daily, it's been a lot of red as well, right? I would not be surprised if we saw a move back up to the 50-week moving average, which is around $98,000 right now, but we have not seen that. So if we bounce back up, $10,000, $11,000, know that we're not completely out of the woods yet. We'd really want some closes above 100,000 to get above the hump, right? To make more people bullish and to really make it more questionable whether we're going back into a more bullish time. But if we do see a bounce up to 98,000 and you've been sitting on some positions that you really want to get out of, maybe that's a good opportunity too. But we have not seen much relief recently. So yeah, that's kind of my plan. Let me know your thoughts. I'm much more focused on Bitcoin than altcoins at this point. And if I want to take more risk, I will be using leverage instead, because we saw a month and a half ago, that there are times where the market just falls 50-60% for altcoins, right? Like that doesn't happen with Bitcoin. So it's much easier, I think, to invest in Bitcoin using levered positions and feel good about that than trying to invest in some altcoin that I don't know if it's going to be around in 2 years and in the meantime is going to face insane volatility. Let me know your thoughts though. Again, if you do want to check out BYDeFi, there's a link to it in my link tree, right? Make sure you understand how leverage works. Make sure you understand the risks. If you want to join me on Telegram, there have been more and more people getting banned on YouTube. So check that out underneath the video as well. Thank you so much. I appreciate it.